Hey guys, today I'm going to talk about market timing and I'm going to show you some specific stock market timing strategies. Now, a word of advice on market timing: if you do any research on market timing, you're going to find a lot of people saying don't try to time the market. Like, third article here, the problem with market timing. If you ever read Seeking Alpha, why market timing doesn't work, if you ever read Seeking Alpha, you're going to read some articles on market timing, and then in the comments section, half of the people are going to say you can't time the market, stop trying. I don't know where this idea comes from. I think the main idea is that people already have the conclusion that buy and hold, where you just buy stock and you don't even worry about the time, is the better investment strategy. So they hold to that, and then because they already have that conclusion, they make up a reason not to time the market. Now, of course, buy and hold has advantages, mainly tax advantages, but market timing can work both in terms of selling what you have, and even if you want to buy and hold, you can still use market timing to add to your position, and you can also use it to subtract your position. And I'll get into that maybe if I have time in this video. I'm going to try to keep it under 10 minutes, but if I have time, I'll get into that as well. So let's start with looking at a couple market timing strategies. If you do a Amazon search, you will find a book called All About Market Timing, which I reviewed in the Bubba Report. In the Bubba Report, I write a monthly trader's book summary, where I take a book, I read it, and I summarize the main ideas for you. You can check it out at the Bubba Report. I am one of the many contributors to the Bubba Report, so if you ever sign up for the Bubba Report, it's an annual subscription, 99 bucks a month. I'll put the link below. The idea is you get a bunch of different info in a monthly report, and a lot of that is actionable. I'm in this report. The product doesn't give you much description, but just know that I'm in there, and I give a book summary every month. So this month's book summary was this book, All About Market Timing, and the book does present a few interesting market timing strategies. The first one is actually the standard portfolio market timing strategy, which is sell in May and go away. If you've heard of this before, the idea is during May you want to get out of the market and just be in cash or bonds, and then in October you get back into the stock market again. Well, this book, All About Market Timing, updates that strategy, and I've talked about this strategy many times on Seeking Alpha. If you just type sell in May and then my name, Damon Vario, you will find my articles on this on Seeking Alpha. The sell in May article here looks at that strategy. Seasonal biotech portfolio gives a advanced version of that strategy, but I'm going to just simplify it and explain what they talked about in All About Market Timing. Now, when you are doing a market timing strategy, generally you're looking at the market in general. You're not going to be looking at a specific stock, so you're not going to be playing Amazon or Apple or Google. Instead, what you're going to do is you're going to look at ETFs. Now, if you don't know what ETFs are, they are essentially the same as a mutual fund, but you don't have to pay management fees. If you want a list of ETFs, there's this options, the Chicago Board of Options Exchange, and here it lists pretty much every ETF. Now, all of these just match an index, so if you wanted to play a whole market, this is what you would buy. You'd buy one of these tickers. All right, I'll leave this link down below in the summary or the description so that you can get into it. But here's an example. The QQQ is a very popular ETF, and what the QQQ does is it mimics the NASDAQ. So the entire NASDAQ market is mimicked in the QQQ. Now, back to what we were talking about. All About Market Timing presents a seasonal strategy where you get in. I believe they gave you I'll open the book report, the book summary. I'm not in grade school. It's not a book report. So the best 6 month strategy is what it's called in here. So we look at October and December, and that's when you buy. So right now, we've already passed that date. But in October and December, we're going to be looking at when the MACD line, if you use stockcharts.com and just put in QQQ, the MACD line will automatically appear below. You're going to want that black line if you're risk seeking or you want to get in early, and the red line if you're more conservative. I recommend the black line. You're going to want that to cross over this zero area, right? And you're going to want it to do that within October to December. So we would have bought exactly at this time. We would have entered the market. We would have bought the QQQ. So if you look here, we would have bought it roughly 104, and you're just going to hold that all month. You're not going to worry about it all year. You're not going to worry about it until April to June. And in that time frame, you're going to start watching the MACD line again, and if it crosses below zero, that's when you get out. Now, if you wanted to take things to a more extreme extent, you could just watch the MACD line and trade, but I don't recommend using the MACD line. I don't recommend just looking at this one line. I don't personally prefer it because it's a measurement of market momentum, and if you want to play momentum, I would look at more fundamental aspects of the ETF, not just this technical aspect. But that is the strategy. So between October and December, wait for the MACD line to cross above zero and buy. So you'd buy in and around 104, and then later, and we're not there yet, but as we get closer to April, we're going to be wanting to watch the MACD line. If it's below zero, which is already there, then you're going to want to sell. So that actually gives us a problem, because if it gets into April and we're still below zero, we automatically sell and we didn't really make any money. So there's another strategy where we look at the moving average, which is what we have here, but they recommend a moving average of 25 days and only to look at one moving average. So this is strategy number 2 for market timing in ETF. You look at the moving average, and they use the weighted moving average, which we don't really have here. I'm just going to use the we're just going to look at the exponential. Okay, why not? You'd have to use another program to look at the weighted moving average, but I'm just going to lay this out for you. So you look at this weighted moving average, and if the stock crosses above it, you buy. If it crosses below, you sell. Again, this strategy doesn't seem to work very well with this ETF. You'd buy here, you'd sell down here. Because this moving average is almost always the same, you're buying and selling at the same point, which is just weird. Here you'd buy. Here's one where it worked. Here you'd buy, and then here you'd sell, because the white candlestick crosses over that moving average, and then here the black candlestick crosses under. So you would have bought it 104, sold at 110. Now, both of these market timing strategies are a little too simple for my tastes. I like to look at multiple indicators. My favorites these days are the Arun lines, the ADX lines with the directional indexes, and the slow stochastics. And basically, they're easy to watch because a crossing over is a buying or selling signal. Now, red for these, the Arun and the ADX, is bad, or it's bearish, and green is bullish. So here you have a selling signal, and here we saw the red line has always been above the green line. It looked like it was going to cross under, but you would have been selling or short on the stock around here as well. So this would be your first selling signal. You would have shorted or sold. Let's just say shorted, and you'd still be short right now, and you'd be up about almost 10%. So that's a good way to use technicals for ETFs. If you really want to time the market, I recommend you use these 3 indicators, not the MACD line, not the moving average, but you can use them in conjunction if you wish. Now, how do you use these? Well, the Arun lines, you're just looking for a crossover. If red crosses over green and it goes above 70, that's a short or sell signal, and vice versa for green. Now, if the ADX red, green, and black lines, you're going to use them in conjunction. If the black line is above and the well, let's just look at the bearish, and then I'll just say vice versa. All right. So here's one. The black line is below both the red and green lines, and the green line has crossed above the red line. If those two conditions are met, you have a buying signal. So we would have bought right here. And then we see the green line cross below the black line here, and that's when we would get out. So we would have gotten out almost at the peak. When it was started to fall, we would have gotten out, and we would have gotten in pretty low down here. So that's how you use that ADX. And then the stochastics, you're going to want to wait until both of the lines get below 20 to buy and begin to move upward. So around here is when you'd buy, and as you can see, that's just a few days ago, and it did give us a precise signal of the stock or the ETF being oversold, and now it's moving upward. Okay, so you can use all of these in conjunction. If you have a buy signal here and this looks bullish and this looks bullish, then you might want to get in. Alternatively, you might just use the slow stochastics position trade, because I found them to be very, very accurate. Now let's look at a couple more ETFs. So you don't have to play the US market with ETFs. If you want to time the US market, fine. But if you also want to time certain industries, or if you want to time foreign markets, you can do so. One of my favorite ETFs, the one I most play often, is RUS. Now RUS is interesting because it's an inverse of the Russian stock market, and it's leveraged 3 times. So it moves fast and it moves hard. And this has made me a lot of money with options because of its quick movements. Remember, options, if you play stock options, they have time decay. You don't have to play stock options to time the market. You can also use stock. But the idea of RUS is it moves hard and fast. And unlike RSX, which is what most people play when they play the Russian stock market, RUS isn't at this low $12 to $17 level as a 52-week range. Instead, RUS moves really fast from 25 to 65, so you can make a lot of money quickly. It's very volatile, but because it's volatile, it's risky, which is why I recommend options. If you play with stock options, your risk is limited. If you're buying calls and puts, your risk is limited to the price of that option, whereas with stock, to get the same type of profit, you're going to need to put in usually like 10 times the amount. If you're interested in options, I recommend you look at my other lectures or other videos, and I have a interview with Bubba about options, the benefits trading options. You should probably check that out. It's a quick interview. Yeah, it's actually on my YouTube channel. You can also listen to it on the radio. It's a rebroadcast of libertytalk.fm. But if you don't know anything about options, I recommend that because you can play the RUS, which is highly predictable based on the technicals that I've just showed you, and you can make a lot of money with stock options. Now, those are the market timing strategies that I suggest. Those are the 3. So there's the 2 that I mentioned from this book all about market timing, and then there's the one where you use technical indicators to just play the ETF of your choosing. I think I've gone over the time I wanted to, so I'm going to end this video now. Please subscribe for more videos like this. Also hit like, and I want to know from you guys what kind of videos you want, because I'm running out of ideas here. All I know is what my students ask me, and they tend to ask me the same questions, and I already have videos for those. So if you have any interesting or novel questions, or if you're just curious about how something works or a certain trading strategy, please let me know in the comment section below and I'll make a video for you.